Fed approves quarter rate hikes, signals more increases likely. The Federal Reserve approved an interest rate increase of 0.25 percentage point and signal plans to raise again next month to continue lowering inflation. The decision Wednesday following 6 consecutive rate rises that were larger, including an increase of 0.5 point in December and 0.75 point in November. The committee anticipates that ongoing increases in interest rates will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive. The latest increase caps a year in which the Fed lifted its benchmark federal funds rate from a near zero to a range of 4.5 to 4.75, a level last reached in 2007. We can now say for the first time that this inflationary process has started. The Federal Chair, Jerome Powell, said the job is not fully done. Tom, what are your thoughts on this?
Well, remember, Jay Powell has said that until inflation is at what percent, 2%. Or I can see it, or I can see it from here, see the whites of their eyes, I'm going to keep raising rates. So he said the disinflationary process has started. What he means by that is he's starting to see the peak and flatten and like momentum start to come down. But he says he's still going to be raising rates. What this means to people listening is that all those headlines you see about tech layoffs, it's not just going to be tech. There's going to be more layoffs in other sectors because this is going to slow the economy, slow down consumer spending. We've already talked on past podcasts about Christmas spending and things that were down. And so this is just a sign that the worst is over, but he's still going to be putting these quarter point rates there. Mortgages right now are still 7 if you don't have perfect credit, 7.5, even 8 if you have horrible credit. And if you have horrible credit, and why are you buying a house right now? Because it is going to be 8 for you. Everybody else, it's 6.75, 7. So this is going to keep slowing down the economy. But he says the job is not fully done. More is coming.
Okay, so you say that, but then I read a story here, Tom, from Insider that says the biggest risk to the market is no recession at all in 2023. JP Morgan strategists say this is an insider story as well. And this is on page 8. It says the biggest threat to markets right now is as if recession doesn't materialize, forcing the Federal Reserve to remain hawkish. JP Morgan strategist Mike Bell said the S&P 500 or NASDAQ composite are nearly up 6 and 11% the past month, respectively, as Wall Street sees the Fed reversing its tightening campaign in response to an economic downturn. But if the U.S. economy avoids a recession and wage growth remains high, then the Fed would not cut rates as expected and instead would have to resume rate hikes in the second half of the year, lifting them higher than Wall Street currently anticipates. Bell said, unfortunately, at that point, you're back into a world where both bonds and stocks would go down together, he said. But JP Morgan's best case assumes there will be a recession in 2023 that will allow wage pressures to moderate and Feds to cut rate in 2024. Does that make sense to you?
It does make sense. And what it means is this. Can I just paint a different picture? I'll do a BizDoc case study and I'll paint a different picture. Okay. The economy is the cheerleader. Okay.
What does she look like?
She's upstairs in her bedroom, and Jerome Powell's in there with the cheerleader.
Okay.
And until the economy...
This is an analogy, folks.
And
this
until
is just a metaphor.
The economy...
We're being analogy.
Right.
Shit.
Exactly. And until the economy starts cooling down, which would be your parents' headlights coming into the driveway, he's not leaving the bedroom and running out the back door.
Wow.
That is what's happening. So the economy is going to keep getting pounded by these interest rates.
Tom, please continue to tell me how Jerome Powell's up in the bedroom pounding the economy. I got to know. Running out the back door.
That's exactly, but that's the way to look at this. And so what JP Morgan is saying is unless we have a recession, which is a little bit of pain and shift in the economy, Powell's not going to move the interest rate. So in other words, until we have the pain of recession and some unemployment, which is terrible part of the pain, but it's part of it, and we have, price starts to come down. Price coming down on eggs would be a nice thing, especially for the egg master.
Thank you.
Vinny.
Mm-hmm. The egg master.
But until that happens, and so I'll use a nicer approach. If you're out there snowboarding and you tear up your knee, stretching that knee after the surgery, if anybody's ever had a knee injury, is horrible. You go to the doctor and it's horribly painful. Stretching the knee is what has to happen for our economy. And there is going to be some unemployment. There is going to be prices come down, and it's going to be tough. And if that doesn't happen, JP Morgan saying if we don't get a little bit of pain and that doesn't happen, then he's going to keep raising rates, and which they went into a technical terminology, which means bonds and stocks both end up in a bad place, and the economy doesn't have a chance to kind of cool off.
Okay, so Pat, Tom, so he's up there, a lot of pain, a lot of pounding. Is there any way he could stimulate like the economy with some, I don't know, like Viagra? You know what I mean? What
Some stimulus
is there
checks.
anything-
Well, it goes
But
like
here's
this.
a challenge to continue with the analogy that you're taking.
Yeah.
And the pounding that Tom took. To go with that analogy, here's what you have to be thinking about.
Yeah.
Imagine, honestly, imagine straight up, if you're on Viagra
Yes.
for 10.5 years straight every single day, you're just taking Viagra.
Yeah.
That's what happened to the economy when we
shit.
had 128-month
See
economic
how we-
expansion.
See how we did that?
So that's the challenge of what's going on today. We've been on Cialis, or freaking all these guys nonstop, and now the economy's like, dude, I got to take a break. I got to take a break.
By the
That's
way,
kinda
shout
what
out
it's
to our
going through.
sponsor right now. If you're dealing with
After 4
erectile
hours,
dysfunction,
after
you can't
4
get it
hours,
up.
Go see a doctor.
You
So
want-
we have to go see a doctor.
Let me
now.
tell you,
Yeah, that's
against
right.
my wife's wishes, I've had 2 Yetis full of coffee today, and that's probably the issue.
That's so funny.
So my warning to you all. No, think about it this way, Vinny. Once the economy shifts and the prices of things come down, even though there's some unemployment, what do the people that have jobs start doing? They start buying incremental things again, maybe traveling a little bit more. And so what that means is GDP goes back up because people start spending naturally and prices have come down a little bit. That's the whole circle of life they're trying to manipulate here.
But is there going to be like a moment? Do you guys think, Pat and Tom? Do you guys think, you two Adam? Is there going to be like a moment where it's like, all right, guys, this shit at the fan? We're like, is there an announcement when you hit like a real deal recession, like when it's really bad?
It tends to be a slow drip,
And then it just-
drip. Like in 2008, when I experienced my first like
okay.
taste of the nightlife.
Yeah.
It was markets down 500 today, markets down 800 today. We're talking about the Dow typically.
Yeah.
Markets down 900. Boom, we're down 1,000, and then it's like next thing you know, we're down 40% or whatever the number was.
Yeah.
Slow drip. You were already just starting. I think you had just started PHP right after that. I want to say so. That was
So there's no actual moment. It's just everybody looks around and goes, we're inside of it right now.
Can I give a
Yeah, please.
So number one, shout out to who I think is the most important figure in America today. It's his birthday this weekend. And I'm not talking about me. We share the same birthday. I'm talking about Jerome Powell, February 4th. Pull him up, Rob, just so I can fact check this thing. Let's take a look at this
Let's see the
good-looking guy.
cheerleader
I already
guy.
sent it to Rob, but now he's doing the work. I don't
Let's
know
see
why
the
I'm
guy with the
slacking
cheerleader.
things.
Look at that
Boom,
guy.
look at that. February 4th. Shout out to him. But the
Wait,
Fed,
53? So this is a 0 birthday for him, isn't
He
it?
is. It's going to be 70. Shout out to my dad, Jerome Powell. But I just want to give you some quick numbers real quick, just so you can kind of wrap your head around the numbers, because I think Pat teed up exactly what we should be discussing, is that these prognosticators who are there's a recession in 2023. No way, it's going to be 2024. What's Biden going to do? No way Biden's going to enter a 2024 election. If there's a recession, he's going to stimulate the economy, whatever it is. Here's just some numbers for you. Inflation for the year, I know, was up as high as 8%. Overall, was 6.5% year over year last year. I think they want to keep it somewhere around 2 to 3%. So it's almost double where we'd like it to be in the United States. Unemployment somehow is still 3.5%. I know that you think that's going to increase dramatically over the next few years. We'll see. The last time it was 3.5% was under the Trump administration. I want to say somewhere in the 2018 range, where he was bragging about, hey, this is lowest unemployment, lowest blacks, Asians, whites. It was obviously a great time for the economy at that point. But here's where I want to go to. We've talked about this a few times. This fear-greed index. CNN does a good job about this, Rob. I don't know if you want to just pull that up. The fear-greed index, 1 month, so it's 0 to 100. 100 is like full-on greed. 0 is like shockingly fearful. Right now, 1 year ago, we were at 28. 28, just to put it in perspective. That's when crypto started falling.
Yeah.
Absolute fear, extreme fear mode. A month ago, it was 38, which was essentially fear mode, essentially way less than neutral. Now, today, we're at 68, which is like trending towards extreme greed. So I don't know what's happening in the economy over the last month, but some of these numbers, inflation going down, employment being strong, I don't know. I can't make sense of it. Is the economy in shambles? Are we doing better than ever? Are people greedy? Are people fearful? I think, to answer your question, I think there's a famous saying, like, trying to predict the stock market is the equivalent of trying to figure out a drunk, stumbling man figuring out his way home. Like, he's just going to, it's that whole deal. So, you always hear these prognosticators. who continually get it wrong. What do they say? Like a monkey throwing darts has a better chance of predicting where the economy goes. Last point. I wish what they did, like you ever watch, Fox NFL or, CBS NFL, they show, or ESPN, they show whether it's Stephen A. Smith or Booger Smith or whatever these guys' names are, Chris Berman, all these guys, they show their record for their year against predictions. All right, Chris Berman was 48 and 72 this year. It's like, turns out he don't know shit.
Yeah.
Okay, I wish they did that for people in
Keeping
the financial world. Keep your stats.
Great idea. That's freaking. Yeah,
we'll see what happens.
Well, if you take a look here, and by the way, thanks for bringing this up, Adam. This is really
anytime, Tom.
No.
I love
Good
it.
heavens. No, I meant that sincerely.
So
This
did
is
I.
a good. Adam is talking about a good index to take a look at, and it talks about the emotion driving the market. It's not necessarily consumers
Correct.
out there, you and me. It is the emotion driving the market. What has been happening right now? We've had a lot of layoffs. The market likes layoffs because it means a company is going to be cutting its costs, and in the short time, the stock is going to pop a little bit. So guess what? Greed. Hey, I can go get a little bit of a pop off that stock because Facebook, laid off people, had a pretty reasonable quarter, and they're buying back shares. Hey, I got a little pop I can get out of this. That is a greed index. This doesn't necessarily relate to consumers, but right now, with all the layoffs and things that have happened, the market is in a little pop cycle where people are investing in it. These are sophisticated traders. And taking advantage of the pops that have come from the layoffs and the few companies that had reasonable quarters.
So if you like this clip and you want to watch another one, click right here. And if you want to watch the entire podcast, click right here.